Microsoft, Meta, and Tesla are all reporting results after the end of the trading day. We're going to dig into them in a moment. But here first are the results from Microsoft. Second quarter results, revenue coming in at $81.27 billion. That is a beat of the estimate at $80.31 billion, which is the Bloomberg consensus. What you have right now is the after hours trading. You can see that the stock is moving down. Intelligent cloud revenue for the company at $32.91 billion. The estimate had been $32.39 billion. So they did beat there. And Azure and cloud, other cloud services revenue, XFX is what they're saying, is up 38%. The estimate had been bang on at 38%. Earnings per share coming in at $5.16. All right, let's go to Hatem Dhiab now. He joins us to go through some of these numbers. Hatem, you've called Microsoft the adult in the room. Why is that?
Hey, Marella, good to be on. Simply because we have a lot more clarity as to what happens with their numbers, and they're a lot more diligent about their spend. You know, they are telling you, hey, this is the money that we need to spend on AI, and this is the ROI that we're getting on our spend. And I think the numbers that you just kind of outlined there show that how good they were. You know, 38% growth on the cloud business is really good, and it shows that what they've been spending is actually bringing some nice numbers.
So they were bang on with the growth of Azure, 38%, I believe we said it was. And can you sort of expand on that number and what that means for this company?
Well, think about it. This is a company that does $80 billion in revenue a quarter. And this business, Azure, which is kind of their main cloud business, is growing at 40%, right? It's really tough to be the company this big and to grow this much. And also what's happening is Azure tells you about how the cloud business is, how the AI business is doing, because what's happening is a lot of these smaller companies have to buy some compute from Microsoft to be able to run all these new AI processes. So for us to see that the cloud business is growing at 37, 38% shows us that all the AI processes they're putting in place are actually becoming a flywheel for their other businesses. So that's why it's so important for investors to see that the Azure business is growing.
Yeah, and that's what investors have been looking for, right? As we talked about the return on investment here. Investors have the concerns generally, and it's specifically for this company, about software and that being replaced by AI. And there was a discussion about the products that Microsoft offers and whether they're in jeopardy. What do you think?
You know, I think Microsoft gets that. What Microsoft has is very unique. They have the trust of the enterprise economy, or at least the business community, because everyone is on Microsoft software. Think about all businesses. What do they use? Who do they trust, right? I think we've seen Anthropic, for example, come up with some of their co-working tools, which are basically some kind of competitor to Microsoft's Excel and PowerPoint and things like that. So we're going to start to see a lot of these things happen. But ultimately, what Microsoft is doing is they're investing in their tools. This is why Copilot is so important, which is their AI kind of Copilot, because they know that the disruption is happening, and they're already putting a lot of work to make sure that their tools are the ones they're going to be using, since we trust them already.
Is it clear how Copilot is doing right now?
It's not very clear. I think there is a nuance that Copilot is definitely behind a little bit, but I think Microsoft gets a bit of a leeway because it's so hard to change your internal systems because a new software is there. So I think Microsoft is being very diligent about investing in Copilot, so it becomes just as good as ChatGPT or other tools out there.
Okay, I do want to just get the number to you for capital expenditure that has just come across. It's at $29.88 billion, and the estimate had been for $23.78 billion. Does that ring a bell for you?
Yeah, I mean, it's obviously a little higher than expected, but I think the reality is we all know why Microsoft is spending. They have to build compute. I think we saw them build 2 gigawatts of compute last year. 2 gigawatts is basically roughly about it's 50 billion a gigawatt, so about $100 billion in spend there. If you spend, this is the back of the napkin kind of numbers, spend 2 gigawatts, you actually bring in about 12 billion in revenue from that cloud compute. So I think the spend that they're doing here, even though it's higher than expected, will bring more revenue down the road.
Okay, as you notice on the screen, the stock share price going down. Investors clearly don't like something about this. You mentioned the 38% growth for Azure, which is positive for them. We just talked about CapEx spending, which is a little bit higher. Why do you think investors are not liking so far what they see?
I mean, it's really tough to know without looking at the numbers right now. But I think probably it's right in line. It's not higher than expected. People were probably expecting more growth than the 38%. But I think the reality is this company is delivering in all cylinders, and I would not get rid of Microsoft at this point.
Okay, let's move on to Meta, which is reporting now as well, fourth quarter results for this company. Revenue coming in at 59.89 billion, so it's 24% increase year over year. The estimate had been 58.42 billion. That was the Bloomberg consensus, so a beat for Meta in revenue. Advertising revenue, which is key for this company with its social media sites, at $58.14 billion. That's up the same, 24% year over year. The estimate had been 56.79, so a beat for Meta there. The family of apps revenue, 58.94 billion. That is up 25% year over year and above the estimate at 57.47. Reality Labs, I'm going to skip over for now, but earnings per share coming in at $8.88 versus $8.02 last year. They've also got a forecast for the next quarter. For the first quarter of 2026, total revenue to be in the range of $53.5 to $56.5 billion. Meta sees this year's CapEx spend at $115 billion to $135 billion. The estimate had been under that at $110 billion. So let's go back to Hatem and start with that CapEx number, which is bigger. Is it a big enough increase to be concerning to you?
Well, it's not big enough. I mean, they're very smart not to increase it too much, because that was one of the biggest concern for Zuckerberg coming out and say we're going to build many gigawatts of compute. As I said, at 50 billion a gigawatt, that's a lot of money to be spent. Coming at 115 billion is a little bit less than people expected. I think so I think that's going to alleviate some of the fears that investors had. You know, we've seen the Reality Labs kind of episode where they spent all this money and then just ended up doing nothing with it. So I think that's very comforting for investors. It's probably why the stock is up.
Okay, let's talk about capitalizing on AI, which all the investors want to know about now. Would that come through basically the use of their ads and sort of curating their ads on their social media apps? And does that amount then to ad revenue?
Absolutely. I mean, you're seeing 25% roughly growth on revenue on their digital ads. I think the engagement really is really the key. I think what Meta has done is they made their software or their platform so addictive, and the engagement so good, and as a result, you know, they're very effective at delivering ads to us. I think the number that actually caught my eye is, you know, everyone's talking about the consumer kind of slowing down a little bit, but they're growing at 25% in their digital advertising. So that's actually very comforting and very good for the business.
You have mentioned that they aren't always clear about how they are spending, and sometimes investors want to know more of the details. Has that just been a repeated problem for them in the past?
Yeah, absolutely. I mean, they pivoted so many times from Reality Labs to the glasses to now all Llama, which is their AI kind of initiatives, which really hasn't been doing that well. And then obviously you have Zuckerberg coming out and saying they're going to spend hundreds of billions of dollars. So I think investors need a little bit more clarity as to where funds are going to go on to go. But at the end of the day, if you're growing your core business, which is your advertising digital advertising at 25% and keeping that kind of pace of growth continue, that's going to be good for investors. And by the way, I'm not a big fan of this company because there's a lot of legal issues that are happening right now, but I think they're delivering on all cylinders.
Yeah, they're definitely being challenged on their social media apps, definitely for children and access there. As you may have heard, Ottawa's looking at whether or not to allow some news sources back onto the social media sites. Previously, there was a separation because news organizations were not getting paid. Does this matter to Facebook? I mean, they're such a massive company, and I'm not sure how big the Canadian market is for them.
Well, I think it matters because there is a lot, they don't pay for content, right? Or at least they don't pay a lot of these, news sources for their content. There's a lot of digital content makers that make money, but it's very, very small compared to how much content is put on these platforms. So it does matter from a principle standpoint that a lot of these news companies start getting paid. And obviously this is going to matter for the AI world too, right? There's a lot of AI platforms basically being trained on content for free. So I think setting a precedent and setting the fact that, hey, listen, if you are a journalist or a newsmaker and putting content out there, it's important that, you get paid for it.
Adjusted earnings per share coming in at 50 cents versus 73 cents year over year. The estimate had been under that at 45-cent Bloomberg consensus. The automaker is apparently making some progress overcoming rising costs. And of course, they lost the incentive from Washington that helped Americans buy EVs with a subsidy. Eventually that ran out. And so now that Tesla is paying the cost for that. Revenue coming in at $24.9 billion, and that's down 3% year over year. The estimate had been 25.11 billion. So a miss in revenue, and I think it's the first annual revenue drop this company has had. Operating income coming in at 1.41 billion. That's down 11%. The estimate had been 1.32, and free cash flow down 30% year over year. So 1.42 billion. The estimate had been 1.59 billion. Capital expenditure, which is a big number these days, 2.39 billion versus 2.78 billion year over year. And the estimate had been at 2.83, so less on capital expenditure there. Let's go to Hatem. He's been standing by to help us unwrap some of these numbers. Hatem, this is the first loss for the company in revenue for an annual period, I think, since the first time it reported. What does that tell you?
I mean, we knew going into the sprint that the numbers are going to be bad because the delivery numbers were just negative. They lost the incentives, as you said, here in the U.S. for the EVs, and obviously the brand had a massive damage from Elon's foray into politics. So yeah, we knew that the numbers were going to be negative. I think you're seeing the stock kind of hold up after hours here is because they've lost a little bit less money than expected. I think their expenditures, or at least their operating expenses, were a little bit lower. So their spend was a little bit lower to kind of defend on that. But ultimately, the numbers are bad. Like everything is down.
Let's talk about free cash flow being down like 30% year over year, down to 1.42 billion. It was closer to 1.6 billion was the estimate, and they were lower than that. So what are they spending money on? Why are they losing this money? What's happening there?
Well, I think they're trying to. Tesla is about it's a narrative right now. They're trying to become a robotics company, and I do believe long term Optimus may be a huge business, but it's going to take a long time for that to happen. And I think what they're trying to right now to do is really to invest in retooling some of their systems, to invest in AI. I think at some point they're going to have to do a deal with XAI or something like that. So there is a lot of expenditure that come in their way, and free cash flow being negative because the core business is really losing and margins on automotive are going down is going to be a little bit problematic down the road. And I think it's up to Elon. And this stock has been trading mostly on the narrative that Elon puts out there. So I think it's really important that we listen to what he says and see if he, what story he tells us.
Okay, you hit on the button. The company has entered into an agreement with XAI of $2 billion. How important will that be for this company moving forward?
I was suspecting that's going to happen. I don't know how important it is. I think, with FSD, right? I think having, Tesla wants to be an AI company. They want it to be a robotics company. XAI has spent a ton of money buying a bunch of GPUs. They need compute. So I think that relationship is mostly about having access to compute. I don't know if they need to have access to X per se. It's just mostly about having access to those GPUs and Colossus, which is I think a million cluster GPU that they built.
You mentioned the company trying to do a larger pivot with its robotics. How much strength could we see from that part of the business this year? I mean, is that something investors can look forward to by end of year, or is it much further down the road?
I don't think anybody is running to buy an Optimus robot tomorrow or this year. There's a lot of issues still there. The product is just not ready. It's just not ready for the market. It's not ready for consumers. It's not a consumer product just yet. I think there is an understanding that maybe down the road it's going to be a big market. But it's definitely not something that we can expect anything from in 2026 and maybe not even 2027.
Okay, what about robo-taxis? Of course, a lot of money there. We know that they have done some trials in the U.S. and regulatory seems to be moving in their favor. What do you see for robo-taxis?
Well, the FSD, the full self-driving story, is really a good one for Tesla because they are trying to build the software to be vision only. And they're not there, right? Like I think Waymo is there. They have basically level 5 autonomy. Tesla started the robotaxi business, but it's still supervised, or at least there's only a few that are working in very few locations. So they're definitely behind. But should they accomplish and execute on that, that would be a good business. I just drove for 2 hours on Sunday with the FSD, and it's really fantastic. The problem, it's not 100%, and I think the problem with having software like this, where if it doesn't work 100% of the time, someone dies, is very problematic. So I think Tesla is just not there, and hopefully they get there this year.
All right. So should we continue to expect losses from this company moving forward, considering, as you say, they're in the middle of the pivot and the EV market, there's a lot of that's slowing down quite a bit?
Yeah. So the core business is selling electric vehicles, right? And we lost the incentives here in the U.S. I was in Europe last week. They've seen very few Tesla. The brand damage in Europe is massive, right? So I don't think the core business will do any better going forward, simply because of all these kind of macroeconomic things that are happening to the company, and some of the micro things because of Elon's forays into politics and some of the brand damage that happened. So as a result, I don't think in the short term you'll see the core business grow at all, and that's unfortunate. And the stock is trading at really insane valuations to justify this this lack of growth, basically.
Okay, Hatem, I got to leave it there. I'm out of time, but appreciate you sticking around for all the earnings that are pouring in today. Hatem is managing partner at Gerber, Kawasaki Wealth and Investment Management.